Opportunity zones are the most exciting investment vehicle that I've seen in my 43 years as a real estate professional. This is CRE Radio and TV. I'm your host, Howard Klein. In this podcast, I'm going to explain who should be thinking about opportunity zones and why and what you need to know. I'll be back in 8 seconds. Welcome back. This podcast is only intended to give you just enough information to know if you should be thinking about opportunity zones. I will be doing more podcasts in the future, so stay tuned. First, let me give you some initial thoughts. Don't believe all the hype that you're hearing about opportunity zone. Yes, opportunity zone investments offer incredible tax advantages if and only if the initial investment is a good benefit. The tax benefits are merely secondary and icing on the cake. Second, this isn't easy material. Even as an attorney for nearly 43 years, I've found it complicated with limited guidance from the government. Most of my energy and focus has gone into considering the best strategies for implementing opportunity zone investments. These strategies, in most instances, will have to be constructed on a case-by-case basis. Let me tell you a little bit about what I've put into this. I have reviewed and analyzed the law and regulations of approximately 250 pages twice. I have also read countless articles, white papers, and attended numerous webinars and seminars. I've considered the law and regulations within the context of other tax laws, sound business and real estate laws and considerations. As of August 5th, 2019, I've spent over 200 hours of research and analysis contemplating various plans and ways to implement an effective opportunity zone investment. I anticipate that over the next year, I will be spending over 1,500 hours dedicated to opportunity zones. This is typically what an attorney would bill out over an entire year. If you want to become an expert on opportunity zones, then you're more than welcome to spend as much time as I am. On the other hand, if you want to know when you should be thinking about opportunity zones so you or your client can take advantage of it, then stay with me. Let's consider first this question. Are there opportunity zone experts? The answer to that question, at least in my opinion, is yes. If your definition of an expert is someone that knows more than you on a particular topic. Now, do I consider myself an expert? I suppose in comparison to many, the answer is yes, because I've spent so much time and I've focused on it. But let me add, this is brand new material and I'm continuing learning. Anyone that intends to be an expert will need to focus on opportunity zones and dedicate a great deal of time and attention to this topic. Let me add that because someone is an accountant, a real estate agent, an attorney, or a financial advisor, doesn't mean that they have the requisite knowledge to advise you on opportunity zones. Now, for a short chronological history on opportunity zones. The law was passed as part of the Tax Cuts and Jobs Act of 2017. That's the new federal tax law. The law became effective on January 1st, 2018. IRS came out with its first round of regulations and guidance in October 2019, almost 10 months later. Those regulations, in my opinion, tended to raise more questions than answers. IRS then came out with its second round of regulations and guidance in mid-April 2019. Honestly, Before this second round of regulations and guidance, I thought that anyone who invested in an Opportunity Zone project was out of their mind. There just simply wasn't enough guidance to know if it was going to have any value or you were going to lose your shirt. The April 2019 regulations, however, provided enough guidance to begin considering Opportunity Zone investments. Now, finally, let's get to the meat and potatoes of this podcast. Who should be thinking about Opportunity Zone and whose radar should it be on? 1. Anyone who has recently sold investment assets and has recovered capital gains. In a separate podcast, I'll explain what a capital gain is. This may include the sale of real property, equipment, a business, stocks, bonds, or any other asset, the sale of which might subject the seller to federal capital gains taxes. 2. Anyone who knows or advises someone who has recently sold investment assets who has recognized capital gains. This may include real estate agents, developers, attorneys, accountants, financial advisors, or businesses that are looking for significant tax benefits that might include equipment rental companies, restaurants, insurance companies, franchises, doctors or dentists, or anyone else who currently owns property, real or personal, or a business that is situated in an Opportunity Zone. Let me add this caveat. There are certain limitations in the law for assets in Opportunity Zones that were acquired before January 2018. With this being said, there are some strategies that can be effective in certain circumstances. We'll be discussing some of those strategies in later podcasts. Also, anyone who is or will consider a 1031 exchange. Now let's digress a bit and talk a little bit about the relationship to 1031 exchanges. The reason why I'm doing this comparison, since like 1031 exchanges, people will consider Opportunity Zone investments because of the tax advantages. A significant portion of the consideration is tax driven. Investors who consider 1031 exchanges are those who have recognized capital gains and are looking to defer their taxes on those gains. Now let me remind you, a deferral does not forgive or excuse the tax. It just delays the obligation to pay the tax on the gain until some time in the future, usually when the asset or property is sold. The deferral is not limited by a certain set period of time. You don't have to sell the new property by a certain time. The tax deferral aspect is an important difference between a 1031 exchange and an Opportunity Zone investment. An Opportunity Zone investment also allows the investor to defer the tax on their capital gains, but only through 2026. So what's the big deal about Opportunity Zones? It's about time we got to that. Here's the big one. Here is the pot of gold at the end of the rainbow. If the investor holds on to the Opportunity Zone investment for 10 years, they do not pay any capital gains tax on the increase in value. Now, what do I mean by this? Let me give some examples to explain how significant this is. Let's say you bought a fourplex on January 1st, 2012. You purchased the fourplex for $1 million. On August 31st, 2019, you sell it for $1 million. Assume for this example, you realize the capital gain of $900,000 that you would have had to have paid capital gains tax on, unless, of course, you reinvested it into a new property that we will call, for our purposes here, 1031 property number 2. taking advantage of the 1031 exchange rules. As a 1031 exchange, you wouldn't pay any taxes on the capital gain of the $900,000 until you sold the 1031 property number 2. Of course, when you sold 1031 property number 2, you could continue the deferral by reinvesting in other 1031 exchange properties. Now let's take the example of an opportunity zone investment. Let's say you take that same $900,000 gain and invest it in an opportunity zone asset that I will call O-Zone property number 1. O-Zone being my moniker for opportunity zones. Again, this is where the 1031 rules and the opportunity zone rules differ. Capital gains taxes will be owed on the $900,000 the sooner of the tax year of the sale of the O-Zone property number 1, or April 15, 2020, relating to the 2026 tax year. It is not an unlimited deferral. IRS, though, has provided some guidance on ways to limit these deferral limitations, and there are some other strategies that can be used to further limit the negative tax consequence. Let's assume you hold the O-Zone property number 1 for 10 years and you then sell it for $10 million. Upon sale, you would realize a capital gain of $9,100,000. That's a substantial gain. But because you held it for 10 years, none of that gain would be subject to federal taxes. There is no need for further deferral, as there would be in a 1031 exchange. This podcast is not intended to sell you on the idea of investing in opportunity zone assets or businesses. In this podcast, all I'm attempting to do is alert you to consider this as an investment opportunity for either you or your clients. These investments have some huge benefits. However, they do have some real gotchas and pitfalls. First, it's complicated. Second, to get into it, you will need not one expert, but likely a team of experts, including lawyers, accountants, real estate professionals, and other business professionals who are knowledgeable in opportunity zones. Remember, the devil is in the details, and you need people who know the details. Don't try to do this by yourself. Third, you, for the most part, have to remain in compliance for the full 10-year period. That's a long time. In later podcasts, I will explain many of the details and some of the strategies that I and others are considering. So remember to subscribe to our newsletters. Let's now summarize what I've discussed in this podcast. 1. If you or someone you know recently sold investment property, that could be stocks, bonds, real estate, etc., and are looking to reinvest their gains, consider an opportunity zone investment. Explore it. Educate yourself. It should at least be on your radar. 2. An opportunity zone investment must first be a good to great investment. The tax benefits are merely icing on the cake. Don't be sold on the hype. 3. Don't try to do this on your own. Bring in a professional or professionals who have focused on opportunity zones and are knowledgeable on the topic. If you want to know more about me or opportunity zones, send me an email at howard@creradio.com or call me at 702-706-4433. That's 702-706-4433.